I've done my analysis this last week, and a stock that has stuck out to me is CrowdStrike in the cybersecurity business. And I'd like to walk you through my thinking today of I don't own any, and where I want to buy it and why I want to buy it. I start with the analysis of any stock with what are their earnings going to be over the next 10 years. I see CrowdStrike as a stock that I want to hold probably at least till 2035. So I come and I look at their earnings and their earnings projections. And there's 47 analysts that follow CrowdStrike right now. And they're projecting that their earnings are going to grow by 21.7% in 2025. And then you can see 16, 25, 24. Then as we get towards 2030, 36, 37, 26, 25. This is a company that's going to double itself every 3 to 4 years. And as you can see, it doesn't slow down as we get deeper in. Now, one thing that sticks out at me is its current PE ratio is 96. That's extremely high. Not many are higher. Give you some representation of how this compares to other companies. Let's look at an industrial company like John Deere. And John Deere is projecting its earnings are going to go down 23% in 2025, then 15, 13, 16. And not too strong. And they're projecting this. When you look at their revenues, they're projecting this because they're anticipating they're going to get greater margins. Because if you're anticipating that your earnings are going to grow by 15, 13, and 16, but your revenues are only growing at 6 and 5, that means you got to become much more efficient at what you're doing, which means you're getting a better price and less cost involved in it. So that's kind of where I go to say, okay, I want to buy CrowdStrike. Now what I got to figure out is at what price do I want to buy it and why do I want to buy it? And so for that, I go to my cheat sheet. Or this is what I call my tell sheet. And if you come down here to CrowdStrike, you can see here I've put in that their earnings are going to grow at an average over the next 3 years of 21.38, with that 96 PE ratio gives them a PEG ratio of 4.49. So what that's telling me is right now it's substantially overpriced. If I come over here and say what is their fair price today, that would be based on if their PE ratio was down around 25, probably around 29, and their PEG ratio was 1. Well, then the price of the stock would be that I'd want to buy it would be 135.74. But I doubt if I'm going to get it there. So the next thing I will do is I'll go look at a chart and see what is the potential, where might it come down to. And remember we said 135. If you'll look at 135, that's down here where its support level is at 200. I don't think it's going to come to there. If I do a Fibonacci retracement from when it was at 200 to where its high is at 389, the Fibonacci tells me it'll come down to this support level of 295. If I do another Fibonacci retracement from this rise here, you can see it went up to here and then came down and then it went on another skirt up. Now that says my best buy-in will be 341, and you can see it covered that 341 here on January the 13th. So I'm saying, okay, I might want to dip my foot in at this 340 mark, 341, let's call it 342, and then if it gets there, and again, because this is a long-term investment, I'm saying till 2035, then it may come down to 296, or it may take off. So my initial order is going to go in right there at call it 343. So that's where my initial order is going to be. Now let me go into more detail as to why I think I'm so strong on this. I did a chart, and if you watch yesterday's video, you would see what I did here is I divided my holdings, the 60 stocks I follow, into two categories. One is the AI build out and the other one is the AI delivery. And I believe CrowdStrike is in this AI delivery because they're going to be cybersecurity. We're all going to be using artificial intelligence. We're going to all have more compute power in our own homes or our own offices or our own corporate headquarters. And we're going to have our own data on it. And so we're going to need someone to secure that data as we generate more and more data through artificial intelligence. So that's why I believe CrowdStrike is going to go forward. So then what I did was, this is a repeat of what I showed you earlier. I'm projecting its price isn't going to go up all that much between now and 2028. In fact, its current price is $365. I'm saying it's probably going to finish 2028 around $331. And again, that's because we're in the build-out stage. Until I get the AI and the compute in my office, I don't really need that cybersecurity. I'm trusting that from Amazon and Google and Microsoft, who have most of my data, and they're protecting me. But when I bring it in-house, I got to get the protection, and I got to go with somebody like CrowdStrike. So then what I do is say, well, let's use history to give us some guidance. And history tells me that their price of their stock over the last 5 years has gone up 81% per year for the last 5 years. That's damn strong. 81% per year over the last 5 years. So what I then do is say, okay, if they maintain that kind of growth over the next 20 years till 2045, what is their stock price going to be? And it basically says if it achieves that, the price is going to be, what is that? Hundreds, thousands, millions. $49,445,000 per share. Now, I know that's ludicrous, but it gives me a representation to other stocks. And with that being said, that's going to give me, I don't know where the commas fit in there. I think it's 134 million% return, which makes it the fourth largest stock that I'm tracking for growth through 2045. And I don't own any of it. You see, I do own some Tesla, which is going to grow some. Again, these are relative. I do own some NVIDIA, and I do own, number 3 is number 3 is Somatics, up some 18 to 20% today because of a deal with Walmart. So what I'm saying is I want to build a position in CrowdStrike because of everything I just told you. Because again, I'll buy minimal shares because the payoff is going to come from 28 and beyond, but I need to be, in any dip, building a position. And you can see I've got some others that I need to build a position in. That's Hewlett-Packard. This is Palantir. I'm hoping that it will come down. And this is Square. So that's how I analyze the stocks. That's how I'm analyzing CrowdStrike. That's where I'm going to make my entry. Let's go back to that chart so we can just once again say what the entry point was. As I said, I'm going to try to buy some, I don't even remember what I said, probably somewhere around 325. And if it comes down even further, the next buy-in point would be 294. That would be a bargain. That would create, it would come to that as a result of some event. Some sort of thing that, like a pandemic or some geopolitical incident, it would dive down, and that's where it'd come, and that's where I'd go heavy. But right now, I'm going to try to get in about 325. Okay, wanted to share that with you. If you want access to all my charts and graphs and the things you see, that's all part of my gold platform. This is the work I do. This is how I analyze it. It's available for, what is it, $19.95 a month. but I don't want you to trust me. I don't want you to say, oh, I'm going to get... No, you come and look at it, and you work with it for 14 days, 2 weeks, and you decide if it's right for you. Okay? Kerry Grinkmeyer, those are my certificates that tell you I know what the hell I'm talking about. That's a CFP, a CHSC, and a CLU. I'm a retired financial advisor. I'm 80 years old, and this is what I do for fun.